Okay, can everybody see a video and a presentation? There is a chat box at the bottom for Q&A. You can contribute comments and questions down there. Okay, great. So hi everybody, I'm Michael Minson. Let's get started. Today we are going to talk about COPA, the Community Opportunity to Purchase Act. And the goals for today is really understand the new San Francisco multifamily building legislation. And we're going to explore some of the opportunities and some of the challenges that that creates. And then at the end, we'll have an opportunity for some questions from any of our panelists. So before we jump in, a quick technical tip on how to navigate the webinar. So if you have a question at the bottom of the screen, there's a Q&A section. Go ahead and enter any questions down in there. And Kim Embry, our moderator, will help us sort those out. And we'll have a question session. We'll answer all your questions at the end. So go ahead and log your questions as they come up, and we'll get to them at the end. We also are recording this, so if all goes well, we'll be able to post this to sfcopa.com, our website. Currently, that's our invitation website, and we'll redirect to a permanent website, which will house this webinar. Let's start it off. I'm Michael Minson. I'm the owner of the Level Up Group. I'm also the operating principal at Keller Williams Realty. Andreas, you want to introduce yourself?
Hi everybody, my name is Andreas. I have been working with Michael for quite some time. It has been an absolute honor. I work with a lot of investors and developers, and would love to share my perspective on COPA this afternoon.
Great.
I'm Daniel Bornstein. I'm a attorney who focuses my practice on representing owners, property management companies, brokers, and handling landlord-tenant matters. And happy to help out on this complex issue that we're all facing.
Thanks, Daniel. Thanks, Andreas. Let's jump in. So COPA is a new San Francisco ordinance. It stands for Community Opportunity to Purchase Act. And basically, at a nutshell, gives qualified nonprofits the right of first purchase for any multifamily building sold in San Francisco. So there's a lot to that sentence, and we're going to dissect that in the next few minutes here. But the goal is really intended to create more affordable housing. So I think we can all agree that San Francisco needs more housing. This is one way that the city supervisors are attempting to solve the affordable housing problem. It does affect all buildings with 3 or more residential units. And so commercial units, mixed use, don't count towards that residential count. It has to have 3 residential units or more. And it also affects vacant lots that are zoned for 3 or more units. So I'm not going to go into detail on the flow chart here because it is a bit of a complex process. But what I wanted to show you is that the typical sales process for any building in San Francisco is fairly straightforward. Seller decides to sell, they market it on the public, they get an offer, and then they proceed to close. That's a typical process of how a sale works just about everywhere in the United States. In San Francisco, for these multi-unit buildings, 3 units or more, the process becomes quite complex now, with several waiting periods and several opportunities for notification periods required for us to notify qualified nonprofits. They have a right to entertain that offer, creates additional delays for them to consider the offer. If a market offer comes in, you have to go back and re-notify the nonprofits. So the process gets very complex. One of the big takeaways here is that the escrow period will take about 60 days for a qualified nonprofit. So there's 30 days on the market, which is a mandated period of time for the COPA program, and then 60 days for the close. If a qualified nonprofit doesn't want to participate, then it's just a normal sale. So let's digest this in a little bit more easy to understand format. How does it work? So it starts off, the mayor's office right now actually is curating a list of qualified nonprofits that are eligible to participate in the program. So they have to have, what makes a qualified nonprofit? You have to have a track record and a mission for managing and supporting affordable housing. You know, as a point of reference, the San Francisco Small Sites program, which is, you could look at it as perhaps the financing side of a COPA program. San Francisco Small Sites has been around for a little while. They basically help nonprofits fund the purchase of these types of buildings. It's separate but related to COPA. They have 7 qualified nonprofits in their list. So we're not anticipating hundreds and hundreds of names in this list. We don't know what that list is, but as a point of reference, the San Francisco Small Sites program has 7 qualified nonprofits in there. And the seller has to give a qualified nonprofit the opportunity to purchase the building. The buyer, the nonprofit, has to purchase it at market rates. So they're not asking the sellers to take a sacrifice or a hit on the price, but they are given the first right of purchase, which includes the first right of offer and the first right of refusal. So they get the chance to bid on it before anybody else, basically. And then, like we said before, the extended timelines to close, it's about 90 days from start to finish. So it's a lot longer than a typical San Francisco escrow, which can run anywhere from, say, 10 days if it's all cash to 20 or 30 days if it's using conventional financing. If no qualified nonprofit emerges, nobody raises their hand and says, yes, I want to buy this building, then it's a normal sale. It just proceeds as normal. You're not having to involve the city, the mayor's office, or a nonprofit in the purchase at all. So when we talk about increasing affordable housing, that really means that once the building is sold to a qualified nonprofit, it gets a rent restriction on it. So the building becomes permanently rent restricted and affordable housing in perpetuity, and that's via a deed restriction. So some of the qualifications that they have, once it's rented, the average median rents can't exceed 80% of the area median income, and the average income of all the tenants can't exceed 120% of the area median income. So it's restricting who is allowed to be a tenant in that building in perpetuity as well. So that restriction is recorded on title as a notice of special restrictions. You may have seen these. This is not a new thing, but it's very specific for COPA that it preserves the building as rent restricted affordable housing with these terms, these area median income terms. It also protects the tenants from no-fault eviction. So some of the challenges that this creates, it's obviously new legislation. It's a fairly heavy hand. And we're going to discuss exactly who is affected and what's the likely impact. But we definitely know this is going to slow things down. And where we anticipate the biggest pain point is going to be around that 30 days to get an offer response. A qualified nonprofit has, once you notify them that you are selling your building, you have to wait 5 days for them to respond and say, hey, I'm interested in participating in the bid. Then you can market it on to the public. You have to market it for 25 days. And at the end of that period, if you get an offer from the market, you have to submit that offer back to the qualified nonprofit that raised their hand and say, hey, do you want to meet or beat this offer? So that 5 days plus 25 days is a 30-day built-in delay added on to the process for a 3 or more unit building. So that really becomes a problem when you're dealing with a 1031. And as you know, a 1031 has 45 days to identify 3 properties and then 180 days to close. And if you're waiting 30 days to hear if you're even going to get your offer accepted, that's going to create a lot of anxiety and stress in the marketplace. It may deter some people from buying in San Francisco, and it will certainly create a lot of unintended consequences. The COPA right now is unenforceable. The city has declared it's unenforceable because they don't have that list of qualified nonprofits yet. So I understand from that the city just released the applications so that they're starting to collect these names of qualified nonprofits. They're expected to have that list completed by 3rd of September. Some additional challenges are with any new ordinance, and particularly this one that's so sweeping, that there's some uncertainty of the stability of how will this look over the years and how will this be enforced. It is expected to be challenged in court. We don't have a particular view of our perspective of who is going to challenge it, but it seems like it probably will. Although a similar law in DC has been upheld. So hard to say. Andreas, do you want to walk us through where we see some opportunity?
Yes, absolutely. So with every challenge comes opportunity. I think the biggest opportunity in this case is more market exposure. So as Michael was pointing out, it is or will be required to share any property with the list of qualified non-for-profits, and that has the potential, that increases the exposure, has the potential to generate more competition, and could potentially lead to a higher price point. Next slide. Okay, so what really is the impact? And just to set the context, we wanted to share some numbers. So the key theme that you can see here is that the number of three unit buildings and above that is being sold in San Francisco is fairly low to begin with. So over the past 12 months, there were about 300 recorded sales on the MLS, about 160 3 to 4 unit buildings, about 130 5+ unit buildings that were being sold. So if we break that down even further, you can see that there's really two buckets. One of the buckets is what we will call the low impact bucket, which we believe for luxury as well as vacant buildings, we don't foresee a huge impact there, just because it is not in alignment with the mission statement in non-for-profits. On the other hand, where we do see a high impact is for buildings that currently generate low gross rents. This is where we believe nonprofits see the biggest opportunity, and that is also in alignment with their mission. Next slide, please. Great. So in terms of outlook, what do we expect? I think the biggest factor here, as Michael was alluding to earlier, is uncertainty. Having said that, every uncertainty also brings opportunities. So savvy investors are able to take advantage of this uncertainty and potentially get into deals. As Michael was referring to earlier, there is some open questions on the 1031 exchange deadlines, since this will complicate things further, and sellers could come out to be vulnerable just given these constraints, which makes the whole process more complicated. And I think in a nutshell, yeah, I think we already talked about the 1031 exchange, so I think we are good on that one. And then last but not least, long-term impact. We believe as uncertainty will be reduced, as it will stabilize, pricing will not be impacted once the uncertainty is taken out of the market.
Daniel, do you want to speak to your thoughts on the ordinance and any anticipated challenges, or what to do if you're a buyer or a seller?
Sure, I'll be glad to, thanks. First of all, I want to emphasize that I think the real harm that this does is that it makes, as was mentioned, transactions longer, more cumbersome, more complex, and those brokers and real estate agents who are handling these type of transactions are now adding a further degree of complexity. And that, I think, is the fundamental issue in this whole program. In terms of court challenges, there can be some viable court challenges based upon the right and freedom to contract. And my expectation is that some trade group may file a challenge to this ordinance. And if not, a trade industry group, maybe an organization like the Pacific Legal Foundation, who has at times filed lawsuits against the city when they've sought to overreach in some of the legislation involving landlord-tenant related matters. At this point in time, I'm unaware of a prepared court challenge, but I do expect it to occur prior to the September date. If you are a buyer in this scenario, and assuming that the legislation remains effective and in effect, my suggestion would be any offer is made subject to the seller complying with the seller's obligations under COPA, so that you're not potentially put in a position of violating the law as well. There are identified enforcement mechanisms that includes the right of a qualified nonprofit to file a lawsuit, and they've even listed the type of damages that one would expect if you don't substantially comply with your obligations. If you are a seller, and so let me back up, if you are a buyer, your buying of a 3-unit or more property should always come with a contingency that ensures that the seller has complied with its obligations vis-a-vis qualified nonprofits. If you're a seller, the most important thing is that you are working with an agent and a brokerage that is familiar with the rules and regulations, so that you don't unknowingly violate the rules of this cumbersome ordinance, because in the event you do, you're going to face scrutiny, and you're going to have to sign a statement upon close that indicates that you substantially complied with your obligations. So there is a disclosure aspect to this, and if you are simply doing an off-market transaction of a 5-unit or more building and not following the protocol, if you are discovered to do this, you're going to face civil penalty. So it ensures and presumes that you are being guided successfully with an agent who understands the repercussions of non-compliance. What I would expect to arise is that the transaction process becomes more cumbersome, more subject to potential abuse. And we've identified this screen as arbitrage of the ordinance. And right now, though there may be only a handful of qualified nonprofits, assuming over the next 2 decades there are more and more qualified nonprofits that become available to bid on these 3-unit or more properties, there is my concern that a qualified nonprofit, anytime a 3-unit or more building is offered, will immediately state that they're interested. Because if they state that they are interested, not only do they have that first right to engage in the negotiation, but the subsequent right to match an offer is something that allows a qualified nonprofit to actually see every transaction and every price point that comes into San Francisco of a 3-unit or more property. So in the end, a entrepreneurial, bad faith qualified nonprofit can conceivably have the right to match any offer that's made in the city for these buildings subject to COPA. And that, I think, is inherently problematic. I don't anticipate that happening right out the gate, but that is something that I don't think the statute fully understood the repercussions of what they were doing by giving an opportunity to match any offer.
So a bad actor could come in and take advantage of the situation and scoop up a bunch of properties under the guise of being a qualified nonprofit. Is that right? Theoretically?
Theoretically and practically, they have the right to look at every deal and subsequently match any offer. And that presumes that they say they're interested in every single deal that comes in, because if they say they're interested on the front end of the deal, they have the right to match whatever subsequently comes in for a private deal. So that's where I think things get a little bit dicey. I'm not expecting that type of behavior to occur or arise immediately, but it's something that I don't think was well thought out in crafting this legislation.
If anybody's, thanks Daniel. Anybody has any questions, go ahead and put them in the Q&A box below. We did get one question. Daniel, maybe you know the answer to this one. So if there are market rate tenants in the building, what happens to them as they will not fulfill the area median income requirement?
I believe the statute says no person is going to be jeopardized. No existing tenancy is going to be jeopardized as a result of a purchase.
Yeah.
So you're safe until there's a vacancy, and then there will be the obligation to change up that tenancy.
We got another question here about TICs. How do TICs play into this? Obviously, they're not condos; they're multi-unit buildings. But being individual owners and piece and parts sales, is that applicable to this ordinance, or do we know?
That's a very good question. And, you know, with new ordinances, they can't anticipate all of the potential complexities. But what if a individual TIC owner in a 6-unit or 5-unit TIC wants to sell their TIC interest because the building is more than 3 units? Does that trigger a qualified nonprofit's right to actually be informed of it? My initial assessment is probably not, but that doesn't mean that that issue doesn't get raised. I think the underlying belief is that what we're dealing with is, in fact, a building for sale, not a percentage of a building.
I see. Let's see, we got another question here. Can you define low gross rents building? That was my term. I threw that in there, Daniel. I'll take that one. Where we were thinking of below market rate is basically what that implies. It's not a technical term, it's more of a descriptor. So low gross rents would be somebody we typically see when we go out in the market. You'll see a 6-unit building, for example, that might have 4 units paying $500 and 2 units paying market rate. So those buildings would most likely be, in my view, good targets for the COPA for a nonprofit to come in and purchase that building. I think that is the intended target, from what I've been able to determine of who the legislation was written for, to prevent what the city is calling speculators or investors or developers from buying these units, Ellis acting everybody, and then selling them as market rate. Daniel, do you have any comments on that?
Yeah, I think in particular, what it's first of all, just to emphasize, the affordability requirement does not impact existing tenancies, as I stated before. So someone who has an existing tenancy is entitled to retain their existing tenancy. The post-purchase of the property will require a notice of special restrictions placed on the building, and the building will be maintained as a rent-restricted affordable housing in perpetuity. This means that of all the rents paid in the building, they shall not exceed 80% of the AMI, and the gross household income of new tenants of the building is not to exceed 120% of the AMI. So once these vacancies arise, you're going to be constrained by who you can put into these units. And that's why ideally it's qualified nonprofits who are going to be best positioned to handle these regulations, because they become quite cumbersome. And as was mentioned earlier by Michael, the applications are available. So if you know of a qualified nonprofit who wants to submit an application, go to the website and you can pull the application, and you will see that it's not just anybody who sets up a nonprofit. You're going to have a history of being involved in the affordable housing programs before the city is ever going to grant you the status of a qualified nonprofit. Don't know what that means 10 years from now, but as it means right now, we're looking at nonprofits such as Tenderloin Neighborhood Development Corporation, Mercy Housing, and those larger entities that have the experience of managing affordable housing.
Great. Thanks, Daniel. Another question we got, Andreas, I think this one's a good one for you. Are buildings with vacant units more attractive to the nonprofit organizations under COPA?
So that is a great question as well. So generally speaking, just to set the context, buildings with vacant units in San Francisco tend to demand a higher price than units that are rented out, especially the ones that are under rent control, because it is possible for the owner to bring in new tenants at market rate. So a lot of investors we're working with prefer vacant buildings because that allows them to charge top dollars for the units. And of course, vice versa. Those buildings with that are tenant occupied and that fall under the rent ordinance oftentimes demand lower rent. The interesting question here becomes, and I'm also very curious to get Daniel's and Michael's perspective on this, is how do these qualified non-for-profits look at it? Most of those have the mission to protect as many affordable housing as they can. So that means from their perspective, they, from what I understand, are most likely interested in buildings that they can acquire as cost effectively as possible and guaranteeing the protection of as many existing tenants as possible. So based on how I understand it, by having had a couple of conversations, these nonprofit organizations will most likely focus on buildings that are tenant occupied already and that will allow them to ensure the protection of the largest number of tenants possible.
Does that answer your question, Anita? Let me know. We have another question, Daniel. What is AMI? And what
AMI, it's a metric to determine the actual status of a person's household income. So,
and it stands for area median income, right?
Yeah, correct.
Yeah. So they take the income of a median income of an area, and then they'll apply it to does this person make enough to qualify to live in that area in affordable housing? Would that be accurate?
That is correct.
Yeah, great.
And it's defined by the Department of Housing and Urban Development on a yearly basis.
Great.
So it fluctuates, and that is going to be a fluctuating numeric assessment on a yearly basis with COPA.
Do we know what the current AMI is? Another question, is it defined by neighborhood or is it citywide?
I believe it's defined citywide.
Yeah. The Mayor's Office of Housing, I believe, would be the place to get that, correct? For more
yeah, and in fact, you may be able to pull it off the website right now. I think at planning, what I see is $118,400 for San Francisco for a family of 4.
So what about when you get an offer from a market rate? Do you have to go back and can you have a counter round with the qualified nonprofit, and is it back and forth, or is it just a one and done? Do we know that answer?
Very good question. There is no clarity in the statute, and that's really fundamentally where after you complete your transaction, you're supposed to sign a declaration that you substantially complied with the COPA requirements. The COPA requirements don't indicate whether you're precluded from engaging in discussions back and forth regarding offer and counteroffer. And my belief is that what is expressly not prohibited is permitted, which means that I do think that you can go back and forth and see who ultimately is going to get the better offer in good faith. So that if you offer to the qualified nonprofit what the offer was made by the other side, if they come back and say they'll meet it, that doesn't mean that it's the end of the day. Nothing precludes you from trying to get the best price on the property. You just have to engage with the qualified nonprofit in good faith.
Great. All right, anybody have any other questions? Or Daniel or Andres, anything else you want to share?
The only thing I would say is, you know, I've had some clients giving me a call saying they're in the middle of a transaction now, and is this going to impact their current transaction? The answer is no. I would tell you that the best choice is to get these transactions completed in the summer, and then just stay abreast of what goes on, because I do think there will be a challenge. And this is a whole new protocol in San Francisco that's going to require the expertise of real estate agents who understand the process, or that it's going to expose people to tremendous liability.
So the new list of qualified nonprofits is due out on September 3rd, if I recall correct. How firm do we think that date is, Daniel?
I have no idea. The irony is that they just put out the application on the 27th of June, so it just popped up on the website. So they've got to make a move in the next 60 days to do their work. The expectation is maybe it's less than 10 qualified nonprofits in the city. So it, in some respects, creates an oligarchy of 7 big players who are able to pick up buildings in the city at the expense of other people, and it pretty much does away with non-public deal making, where you go to a prospective buyer off market who comes in and picks it up. In that situation, you'll be in violation of COPA.
Yeah. So big changes happening in the multifamily residential market. I'm Michael Minson. I want to thank you all for joining. We have Andreas Ernst and Daniel Bornstein. Super appreciative of your time. We're going to record this, post it on sfcopa.com. If you have any questions, you can reach out to any of us. Our emails are right here on the screen. Thanks so much. Have a great day. Enjoy. Happy Pride, everyone.